Hello, everyone. Thank you for joining us today for our Dynamics GP coffee break, inventory, sales order, and purchase order setup for success. My name is Katie, and I'll be the facilitator today. If you have any questions during the presentation, please type them into the question area in the control panel on the right-hand side of your screen, and we'll answer questions at the end. This session will be recorded and posted on our blog, as well as shared with you later next week. Now, I would like to introduce our presenter today, Dawn McNulty, who is a solutions architect here at Encore. Dawn, I will pass it over to you.
Thanks, Katie. So today, what we're going to go over is the setup of inventory and sales orders and things like that. So setting up SOP, POP, and inventory in order for it to balance through to the general ledger and making sure that your journal entries are working correctly is kind of what we're going to go over today. So there's the SOP setup, which is how we set up sales order processing. There's POP setup, which is how you set up purchase order processing. And then we've got inventory setup as well. And the inventory setup becomes very important because of the way that certain aspects of inventory will affect the way that the inventory affects the general ledger as we post the transactions through. So that inside the inventory, there's kind of 3 areas that we want to talk about. The general one, just kind of overall general setup, followed by how we set up the item classes. And the item classes are important because of the valuation type and whether or not we revalue items at the time of receipt and payment in POP. And then how the GL coding works as we move forward between the as we post our sales orders and our purchase orders. These are, and when I say important GL issues, because it's not really documented that well as to what needs to be set to what number and why you may be out or not out during your transactions. So I'm going to start with the GL side and go over a little bit of a spreadsheet to show you kind of some of the entries that we'll be looking at as we move through today. And then I'll be showing you all these screens in GP as we move forward. All right. So the first thing I'm going to do is let's go into, let's just go to the next slide here. And let me move this in place. Okay. So what we have here, excuse me, is a list of the journal entries that happened when we use actual cost. So the valuation of the inventory is dependent upon how you value your inventory. There are 2 major settings. One is there are 4 possibilities. 3 of them work the same as actual cost, and 1 of them works as standard cost. There are actually 5 listed. There's FIFO perpetual, LIFO perpetual, average, FIFO, and LIFO periodic. The periodics are what they call standard cost. The costs change when you change them, not when the vendor changes them. And then the differentials are then controlled as well. This is also part of this spreadsheet here. I have listed them here. I will not be talking about those directly today, but we will make sure that this gets out to all of the attendees, this particular spreadsheet, so that they can take a look at it. On the actual cost, both FIFO and LIFO work on last in, first out, and first in, last out, or average cost, which just does an average. I'm going to be talking mostly about FIFO costing. So what happens here is that we issue a purchase order for $10, 10 units, $100 each. So the on-hand inventory at the time of the receipt. At the PO issued, no journal entry is done. Secondly, what happens is the inventory is received. The inventory is received to an inventory and an item site combination. 10 units, $100. We now have 10 at $100 outstanding. We owe the accrued accounts payable is set by the vendor card. It sits at $100. Everybody's happy. Then we do an invoice match. So if this is with no inventory revaluation. So what happens is the actual cost comes in on the invoice from the vendor at $11 instead of $10 because somebody either made a mistake or there was a price increase due to another problem. So what happens is we get the 10 units at $10 gets removed from the accrued accounts payable, same as you see up here. The 100 matches the 100, so that 100 matches that 100. And then we pay 11 units at $110. I'm ignoring freight and taxes, of course. And then, so of course, the purchase price variance is $10 because I need a balanced entry. GP will not allow me to post this without it being a balanced entry. So the PPV account on the inventory item has to be sent to an expense account if we don't revalue the inventory. When we sell the product, we sell 6 units at $15. We get 6 times 15 is 90. There's the debit for the customer. There's the credit for the sales. There's the debit for the cost of goods and the credit for the inventory. We are now left with 4 units left. We've taken 6 at 10 out of the 10 at 10. We have 4 left at a $40 per person, which is what we are expecting, and that is correct. So that's the easy one. When we revalue the inventory when all the items are in stock. Now, if all the items are in stock, when we do the same receipt, we have the $100. When we turn around and we hit the 10 at 10, we've got 10 at 11, we get the 110, and you'll notice that the inventory site here, the debit to inventory, the PPV account is set to the inventory when the revalue is set to the item, because we need this to be at $110, because now our inventory cost is now at $11. It's been changed based on this entry right here. Then when we sell it at 15 because we sell the 6 that are on stock and then they go out. Well, that's pretty straightforward. Everybody goes, well, that works great, no problem. But now comes the hard part. So what happens is that we revalue inventory when it's not all in stock. So on Monday, we receive all the product. We receive that product at $10. We hit the accrued accounts payable, not a problem. Everything's the same. We then sell 6 units. When we sell the 6 units, they come out of inventory at $10 each, not $11 each, but $10 each. So we now have 4 units at $40. Then we turn around and do the invoice match. We put the extra $11 into the units right there. We have this one here. We increased the price by $1. So we've now added $10 to inventory. So now we have 4 units at $50. Not 4 units at 44, but 4 units at 50. The units are still 4 because that's all we've got left. We didn't receive anything here, so it didn't increase the on-hand inventory. But the price went up by $10. So GP goes, oh, well, in that case, what we need to do is we take the cost of goods, which it gets from this line here. That's where it gets its GL code. Takes out the $6 for the 6 units at $1 and then puts the $6 in here for 44. That leaves the inventory value of 4 units at the new cost of $11 each. 4 divided into 44 is $11 each. So that is how that particular piece works. Now, it also works very much the same for all the others. So what I want to do is kind of go over these things quickly as we pop through. So we'll quickly log in here. I apologize, it seemed to have timed out on me. And then we start up our GP demo. So what I'm going to show today is I'm going to go through the SOP and POP very quickly because there's very few setup screens inside there that we need to worry too much about. And I'm going to spend a little bit more time on inventory so we've got everything that we need. And I'll show you where these settings are so that you know where the GL codes are coming from. Now, one of the things that the inventory control module inside GP does is it allows an overlay of a GL code. So that means that if I've got my GL code for inventory set at 1300, I then can overlay it based on a segment. And each segment that I overlay it on is dependent on the site. So each site that I use, I can have a different GL code. So for instance, I can have 2 sites and I'll use Vancouver and Seattle. So I got 2 inventory sites, one in Vancouver, one in Seattle. I then turn around and put Vancouver is 10 and Seattle is 20. I can put it to 1300-10 and I can put it to 1300-20. So I can keep separate inventory on the balance sheet. And you have separate cost of goods sales, separate SOP, separate sales accounts, and separate cost of goods accounts, as well as separate purchase accounts. So when the purchaser comes through, it comes through that way as well. I do apologize. It seems it restarted my SQL box, so it needs time for it to wake up. Might already be there. It is. So we set that in the inventory control module is how we set that on the overlays. The same thing works on adjustments and everything else. Anytime you use a site, it will try and do the overlay. There are third-party products that allow you to overlay more than one segment. The piece is written by a company called E1 Solutions out of, they're in both Fargo and in Sydney, Australia. So they allow you to then select additional segments to overlay for things such as salespeople and sales order types and things like that. So that's what we're going to be doing. So with that, so sales order processing. So when we talk about sales order processing on here, really there's not much inside here that we need to be too concerned with. Most of these are defaulted on. The one piece that you do need to look at is the search new rates for transfer process. If you're using multi-currency, do you want the exchange rate on your sales order processing documents to be updated when you transfer it from an order to an invoice? It's a question of which you need to make an answer for. It defaults off. Most people default it on, so we tend to turn that on. For simplicity's sake, if you put prices not required in the price list, it means that you do not need a price level set up for that particular customer if you add new customers and levels. Some people like it that way. These are just defaults. You can either have them blank or you can leave, or you can fill them in. I tend to fill them in. Sales document setup. There are different document setups: quotes, orders, back orders, and invoices. If you do under an invoice type, we'll just look at the standard invoice inside here. All of these work exactly the same as this. It says, do I use the back order? If I allow the transfer to back order, it allows me to put a back order item inside here, and it allows me to transfer things between different places. They are fairly self-explanatory. We won't go into the section inside here about the options about the fulfillment. That's a different seminar altogether about barcoding and things like that. But overall, this is kind of what you're looking at inside here. The delete documents down here defaults off. If you click that on, you can delete your documents. I use that for my demo so that I can remove documents. Once you get running smoothly, you kind of want to uncheck it so that people can't enter an order, print it to the warehouse, and then delete the order. Okay, here we are. So that's kind of the sales order processing side. There's some user defines and some numbers and some options. The big thing on the options inside here is some of this about auto assigning things such as lot numbers and serial numbers. Depending on whether your lot and serial tracked will determine whether or not you want to do that or not. Most people do not auto assign things simply because if I've got five boxes of 5 computers sitting on my shelf, they're stacked up on top of the other. We do not want the sales person to pick to assign the serial number at the bottom of that stack, because then somebody has to move 4 machines in order to get the one that he wants when he could just take the one off the top. So those types of things. And the auto assign lot numbers, if you've got anything perishable, you probably don't want to assign that automatically. They are supposed to take the oldest lot first and then have them pick it from the right location inside that particular area. Okay, so that's the sales order processing side. So numbering wise, there is lots of numbers inside here. I suggest that you shrink them. They start off as 17 digits. You don't need that many zeros. So if you haven't used this before, shrink those down to like 5 or 6 digits. That'll give you 99,000 sales orders before you have to worry about that number again. Okay. So that's the sales order processing. And it really wasn't, for today, that's kind of really what's on there. When you go to purchase order processing, you got the same kind of thing. You've got your purchase order processing set up. Inside here, you've got your requisitions. I will shrink that down. I haven't done that on this particular one, usually because there's too many zeros. Inside here, there's not an awful lot that you need to do besides open this window up to get purchase orders to work properly. If you use non-inventory items, how many decimals do you want? This inside here, if you're allocating your sales orders to purchase orders, becomes important. I usually have these all checked, right? And whether or not I allow editing purchases on hold is up to the customer. Again, down here, these are things that you may or may not want to allow. Again, under options, we have a couple of things about your taxes. How do I do my taxes? Are my non-inventory items taxable or non-taxable? Do I use a single schedule or do I use a different schedule for each one? In some places, certain things are taxable where in other places they are not. So the freight itself is one that causes problems, for instance, in the Canadian market. In the province of BC and Manitoba, freight is a non-taxable item, but everything else is taxable. So you have to have a different rate here. So you end up with filling this one in as taxable and put it in there. Miscellaneous may or may not be, depending on whether it's a labor charge or not. So that's really up to the different jurisdictions as to what's going to go on in there. There is some PO generation inside here, but we will not be discussing that today. Okay. So then the other thing that you need to worry about inside the vendor, come on, wake up, there it is we have to talk about vendors. Now I set, under each vendor you have a list of GL codes. Those GL codes are usually set by the vendor class. So I am going to use the vendor class here and show this. And we're going to grab our vendor. We'll grab a US inventory vendor. So there's a US inventory vendor. So inside here, there's a couple of things that we need to look at. The first one is there's a revalue vendor. This has to do with your multi-currency. But the most important thing here from a inventory point of view is the accounts themselves. So when I click on the accounts, I get a list of these accounts. These accounts are stamped onto each and every vendor that is in this class. The accounts payable control account, if you remember my general ledger, I had AP on my GL chart there. That's where it gets the number for the GL. So that's where the accounts payable come from. It's this one here that makes a difference. This accrued purchases is where your accrued purchases for a purchase order is. That's when I receive the product without an invoice. So I'm doing a shipment receipt rather than a shipment invoice receipt. So I'm doing a shipment receipt. So I'm receiving the product because I need it in inventory to push it downstream. So when I want to push it downstream, because I need to use it to either A, sell it, or B, I could use it in a manufacturing order or an assembly or anything like that, so it becomes part of another product. So it becomes a part of a sub-assembly or a finished good. So this this is where the accrued accounts payable comes from on the purchase order processing side. Okay, so it's important that this be filled in if I'm using purchase orders, and that this be filled in. We can then fill it in on the class and roll it to all of the different receipts and all the different vendors. Now, underneath accounts receivable, I'm not going to show it, but in accounts receivable, the only account we really care about for a SOP is the accounts receivable comes from the customer. Okay. I should make mention of one item, which I will quickly do right here. I know I'm running out of time very quickly here, is when I set up sales order processing, there is one very important toggle, and that's this one here. The posting accounts come from the item. Most people, 98% of my customers, run it from the item. So the item drives the general ledger for sales, cost of sales, markdowns, and service parts and things like that. If you use customer, that comes from the customer card rather than the item card. I have a couple of customers who do that because they do everything based on where the customer is located rather than where they're shipping from. And they don't care about what they're selling. They tend to be commodity brokers, people who sell something like lumber. I want it to go to the GL code for this customer. I don't care the fact that what kind of lumber it is. I sold them lumber. I know I sold them lumber. That's all I sell. So I only have one revenue account, but I have one revenue account for each country in the world because I ship all over the world. So that's kind of an example of that. So most people run on item, and I've been discussing item today so far. So let's go to inventory, and we'll talk about some of the flags inside here. First, we've got your inventory control. Inside here, you got your different document numbers. Again, you can change those. This site here where it says division right here in the shaded, when you first set up inventory control, you must set that. That sets your segment. If you have it set and it's not correct, give Encore a call. We can give you a hand on changing that if you need to. There's some things that need to be done in the background. We can do it in SQL, but then there's some other items that need to be checked on your different pieces. So that division is what then sets up the way that the site works. So when I'm in a site and I bring up my site and I bring up my north site here, you'll see down here I have division 300. So every time I use the north site, it's going to turn this into the sales division. That's what it's going to do. It's going to add 300 to it. And it'll change that particular segment in my chart of accounts. So instead of being 000, 1300. So when I look at my inventory class, which is where all the work comes from, let me just grab my retail product, my actual retail finished goods actual. Oops. There we are there. First off, this button right here, this determines what number should be in the purchase price variance account. If this is checked, the purchase price variance account should be set to the inventory account. Otherwise, the math on the general ledger does not work. If you check this like this, then the account that's in the purchase price variance account should be set to the purchase price variance account, which goes onto your income statement. This is super important. If you don't do this properly, your GL will never balance to your inventory. Okay, that's the most important thing today is check this value versus your accounts. When I click on my accounts here, these ones here are for manufacturing. I'm not going to talk about those today, but these ones here, you'll see here that my purchase price variance account, this is actually set up incorrectly. The demo is set up incorrectly. It does not balance. It will never balance. Because if I receive this product and sell it prior to receiving the goods, the prices will go up and an amount will go to the purchase price variance account and my 1300 will be out of balance. Okay? So if I have it set like this one here should be set to 1300-02. Okay? So this one should be 1300-02 because I have the revalue inventory on cost variance. If I was to uncheck this, then I would need to go into here and type 4730-00, and it would become my purchase price variance again. Now, this should be a realized purchase price variance because the purchase price variance is realized rather than unrealized. We have one somewhere in here, I believe, but I'm not going to worry too much about the actual GL code. So there it is there. So you have a realized and unrealized. This unrealized purchase price variance is used only if you're using FIFO perpetual here, or FIFO periodic, or LIFO periodic. It is not used for any of the other three. So if you use any of the perpetuals, this account is never used. It's only used if your item is set as periodic FIFO or periodic LIFO. Neither of which are very common. I do have some clients who use FIFO periodic. I have no one who uses LIFO periodic. When we do any changes inside here, we can hit save. It will roll it down to all of the item, all the people in the item. So inside here, we can hit the revalue, and we can hit this one, and we can make this one 1302. So now it's inventory finished goods. So now it will work correctly. So that is what will happen on this one inside here if we revalue the inventory for cost variance. The revalue for inventory on cost variance is not available if you are using standard cost because there is no revaluation at inventory cost. The revaluation occurs when you do an inventory revaluation function inside that. So that's how we set that up. And what I'm going to quickly do is I'm going to quickly, do I want to save changes? I'm going to go yes. Do I want to roll down? I'm going to say yes. It'll roll it down to all the items, right? So when I go into here and I do a purchase order receipt, because I already got some items inside here. So if I go to purchase order entry, Ace Travel, I'm going to order 10, whoops, and I missed the site. And again, I'm going to put it to the north site so that it overlays the 300. And then I'm going to go receive the PO. When I receive it, there it is there. I can receive all 10, hit receive. If I look at my distributions, you'll see exactly that entry. I've got my $100 and my accrued accounts payable for $100. I click OK and I hit save. Whoops, let me go post instead. So we're going to post that. So now I've got the inventory in there. So at this point here, I can then go into, and I don't need any of the printed jobs. So that finishes my purchase order from that side. When I go to my receiving, when I go to my enter match invoices, which is the second step on that one, Ace Travel, and I go auto invoice, click this one. There's my 10 units, quantities shipped and things like that. I'm going to change, I'm going to go invoice. So now when I look at my distribution here, you'll see it's just offsetting exactly because the PO was correct. I'm going to go into here and I'm going to make this $11. It's going to tell me that it's different. I'm going to say that's fine. And now when I go to distributions, you'll see here that it's gone $100 and there's the 10. And you'll notice that it's picked up 1301. So this is the purchase. So there it is there. That was the number that I put in for the purchase price variance against Ace Travel. Okay, and against this particular item. So it's all done. So that's now done, and that would then receive it correctly, and now I can go post. When I sell it, it's going to sell it at the FIFO level, and to be honest with you, I do not know what my north site is, but it will then do it from that point of view. So there it is there, and we just don't need that. Cancel that. So that's the sales order entry, and then the purchase order entry is strictly underneath my sales order processing. And oops, transactions. I'll just do an invoice, Aaron Fitz. One at 30. I'm going to change the site to north, like so. And then I'm going to go view, additional, and go to distributions. Yes. There we are. There's the receivable, 3210. There's my sales with the taxes attached, and I have some commission expense. You'll notice that the cost of goods is not there. The cost of goods in the inventory only gets added to this transaction when you post. And the reason for that is that GP does not know in a FIFO basis which bucket layer, it's going to grab as it moves it out, but it will do so from there. So that's where it comes from. So that's kind of what happens inside here. And then we go, okay. So if I post this, it will then post through. I'll close this and I'll put this to the screen. And I'll put this to the screen so we can see that. And I don't need this, don't need that. And we'll get rid of that. So inside here, you'll see down here now you've got an inventory and a cost of sales right down there. Now they've got them in at $100 for the unit because that's what the FIFO bucket was, but this would be your $10 or this would be the $11. If I look at the inventory item, there's all my different transactions, and you'll see down in here we've got both our sales, we have our inventory, and our cost of goods is in here as well. So that's fine, as expected. If I go to my inventory and I look at my receipts, and I go to my single ear, and I go to my north site, and I scroll to the bottom, you'll see there's that $11. That's the unit cost there. But the cost bucket that I just pulled from was this one here because I have 6 of them left and 2 are sold, 6 are left. So one of them is this $100. So that would be the next 4 will go in at $100. But that's how it works. All right. So I know I ran over about 5 or 6 minutes, but it's a lot of content to kind of zip through really quickly. I hope I didn't lose anyone on the way. And what I'll do now is I will do this and this. And questions.
All right, thanks, Don. So if anyone does have any questions, if you could enter them into the question box, and we will get back to you later today because we are at time for now. But I'm going to go ahead and add the link to our events page in the chat if you'd like to check out previous webinars or register for upcoming sessions. I'm also going to be adding the link where you can set your email preferences, opt into our emails so that you can stay in the know about upcoming events and see some latest blog articles. But thank you, Dawn, for the presentation today, and thank you everyone for joining us.